Okay, welcome guys to one of our other trading log series. Okay, so I do apologize for not making one over the weekend because every week the first series that comes out every week ought to be a preview and review of last week. Okay, but I was unable to create one yesterday. Okay, so but I'm going to be showing us. Uh, I'm making one on today's price actions. And before we proceed, a student of this academy from the private mentorship uh, reached out to me today. Okay, and he was, appreciating the effort we put in on the private mentorship because with the how am I going to put it? By putting into practice what he learned from the private mentorship, he has been able to pass his prof evaluation challenge. Okay, so he successfully passed his prof evaluation challenge, and that was a thing of joy to me. Okay, because it's like seeing your efforts, putting in effort to teach someone something, and the person has been able to grab the concept of what you have taught or what you have passed down to him. Okay, so I'm truly happy for him, and I wish him good luck in all future endeavors. Okay, so with that said, let's get down to today's series on the trading log episode. Okay, all right. So coming into this week, okay, I was looking for higher prices on dollar on DSY. Okay, because from I was looking for higher prices. Okay, so it was yesterday's price action said that took off from these relatively equal highs, okay, that took out this uh liquidity resting below above that, traded into. Notice how we respected this was from yesterday. Okay, on Monday reacted off this consequent encouragement, right? So we had a sell off yesterday. Okay, we had a sell off yesterday, and it poked a bit above. It just went a little bit above last a previous wood high. Okay, but notice it's respected. The bodies of the candle respected the consequent encouragement of this uh weekly fair value gap right here. Okay, so we had this right here is real resistance. Okay, that's how we this is real institutional resistance right here. So premium arrays are institutional are re-institutional resistance, and discount arrays are re-institutional support. Okay, so we had a nice sell-off yesterday, so I was looking for these lows and that yesterday. Okay, but we were only able to reach for that, and so I had this in mind that and at the same time I was looking at this fair value gap, that since we are bullish, there's likelihood of not coming down here. Okay, that price may literally just reach today into this week 1 hourly fair value gap and continue going up. That's why I had right here, you can see I attached potential low of the week. Okay, but it was also a drawn liquidity. You can see I have this little magnet, so I wasn't going to change the bias to bearish to bullish, sorry, because we are still very much bearish. Why is that? Looking at this high to this low, that would be an optimal trade entry. Okay, so this I was looking at this range from this high to this low, and notice how we came back exactly at after 12 a.m. midnight. We traced exactly to the discount low of that weekly fair value gap, which is support. So this is support broken, turn resistance. Okay, so this right here, this weekly fair value gap discount low right here is institutional support level. So this was a support level broken, turn resistance. So this is how we trade support and resistance idea, and this right here is price trading into resistance level, which is the consequent encouragement of this weekly fair value gap, right? So we traded into it and had a nice sell off. So our drawn liquidity was obviously here, and the fair value gap as well. But although we traded into it during the afternoon session, but I'm only going to cover the morning session, right? So I didn't change my bias. I was looking for sell off today. Okay, so let's go down. You can see I was basically trying to take the screenshots and analyzing, and I was looking at the battery market at the same time. I was looking at the DSY, GBP, USD, GU, and the EU. Okay, so I kind of caught a late entry in, but this was after the whole move had played out. This is the 15-minute time frame, right? So this is that run on to that institutional level. Weekly fair value gap discount low, right? This is our opening price 12 a.m. and looking at this scenario when we had uh when we had open, you can see how price rushed upwards. Okay, price just took off to the upside, and this right here immediately gives me this right here immediately gives me an idea that this is likely going to be a classic market maker set day. Okay, so our high probability setup, our high probability low risk short setup is looking for a short position above the opening price. Okay, so and notice that this price was not random. Okay, price is never random. That's one thing you guys should have in mind. Price is never random. So this price move that went up, that rallied up the first time, was never random. Okay, what was it reaching for? It was reaching for this real resistance level. So this is support level that was broken, turned resistance. Okay, so we had a nice sell off from there. So we had that fair value gap. So this was a target. Okay, this was a target. We had this OB, and I was looking at the potential. This could be the potential of the week, but I was also looking at this as a draw on liquidity. Okay, so a draw on liquidity simply means price shouldn't reach for that level, but in order for you to make money off it, okay, price must not get to that level. But so long price trades towards that level, that is more than enough for you to make your money. Okay, to have a trade around it. Okay, so let's go down because I don't want to waste. Like I said, our series is not going to be long, 10 minutes maximum. Okay, so this is the lower time frame. So immediately we hit that resistance level. I came in late because I was kind of like I said, I was looking at different markets, and I opened up my chart really late. Okay, so I was doing other stuff, but I had to pull up really late, so I missed the first move. So this right here, I want to point us to another thing. This right here is the classic market maker buy model. Okay, so price is going up to come down. Okay, so everything to the left side of this high is the buy side of the curve. Everything to the left, to the right side is the sell side of the curve. So this is market maker buy model. Okay, so here is the origin, right? Here is the origin, and our draw liquidity, and also that daily fair value gap, right? So we have this move. Price rallied up immediately, hitting that real resistance level, which is the weekly fair value gap discount low, right? So immediately we hit it. You can see price hit it the first time, came down, then run up. So whenever I see price straight into a kind of resistance level like this, and it starts breaking down, immediately I don't look for, although I was not here when this happened. Okay, I came here around somewhere here, and you will see it on the other slide. Okay, so whenever price runs into some certain level of resistance like this, okay, I don't immediately it breaks down, don't start selling. Okay, what I wait for is I watch to see price make an attempt to run towards that level one more time. Okay, so I will probably would have sold here on this fair value gap, because I want to see price trace down, move away, then run either to form a failure swing or to run above it one more time, forming a swing high. You get the point. Okay, so that's what I normally wait for whenever price gets to a certain level. Okay, you can see we had that move, then the second move obviously took out liquidity, came down, there was no shift in structure yet, then ran, took out liquidity one more time, then we had that shift in market structure to the downside, right? So price retraced back up. So this would have been a level for me to sell on this OB right there. You can see price traded up into the last up close candle, the mean threshold. Notice how it respected it and rejected off. At the same time, came back to retest that resistance level, okay, which is by way of weekly fair value gap discount low. So it traded into it and broke down. Okay, so this is where I came in around this candle here. So this right here is referred to as low risk sell. So this is classic market maker reversal pattern. Okay, so this is classic market maker reversal pattern. So we all know what an OB is. Okay, so immediately price trades through this OB, changing the state of delivery from offering buy side to sell side. Okay, so you can see price sold off, came back into that fair value gap right here. So when I put up my chart, and by the time I was done, price was literally trading on this candle, I think. So I sold here as we moved into that fair value gap. Notice we also have a breaker block. Okay, so sorry, mitigation block. So notice this last down close can up close candle before, down close candle before this up move, then failure swing. So this is a mitigation block right there. So price traded into it and also accompanied by fair value gap. So this is a low risk sell, while this is redistribution, okay, before selling up. So I eventually got in somewhere around here on this candle, I think. Okay, so you can see at the time of taking the trade, I was literally taking the screenshots because I wanted to just make sure, you know, since I remember to, to probably take the screenshot. That was why I took it. Okay, because there's gonna be times I'm gonna be too busy to remember to take screenshots, right? So I got in right there, and but something amazing happened. Okay, or something was off about the market, and I'm going to show it to us in the next slide. Okay, so I got in right there, and we were having a news at 4:30 a.m. for GBP. So because prior to the news, GBP was being held, but Euro USD was moving fine, just really fine. Okay, so this is Euro USD trading off into a fair value gap, and we got a nice shift in structure there. Okay, so the same scenario here, classic market maker said the open high and expecting it to. So notice the Euro USD was moving fine, but GBP USD was being held in the consolidation right here. Okay, so it was being held from moving prior to the news release. Okay, so that was something I noticed. I had, because how was I able to notice that was because I was looking at two markets at the same time. So I was looking at the GU and the EU. Okay, so I noticed one was moving and the other was being held back. Okay, so that was manipulation on the side prior to the news event that was going to be released at 4:30 a.m. right? So immediately after the news release, you can see the massive drop down. Okay, so we had our first target reach for, second target reach for, then obviously I was looking for that low right there, okay, for my final target, and you can see it was delivered successfully and easy. So that is how you frame a easy setup, and this all happened just in the London session. Okay, so if you are able to get a move like this, the main goal is consistency. Okay, if you are able to get a setup like this, just let's say 2 to 3 times in the week, and you're able to find it consistently, that is more than enough to give yourself, to give your career a meaning as a trader, right? So that is how you spot easy setup, just by even though I was bullish for the week, like I was anticipating higher prices, the same way we apply the market maker, what's it called, power of three to a weekly chart. Okay, the same way we apply it to a daily chart, because on a weekly chart, on a weekly level, price won't literally move upwards a straight line. That's what I mean. Okay, it has to open first straight down for a bullish week and go up, right? So if I'm anticipating a weekly range to expand to the upside, just like I am this week, okay, I'm expecting price to expand to the upside. Okay, that gives me a long-term bearish long-term bullish bias in mind. But going into the marketplace every day, I want to see the scenario. I want to see is open first, trade down first before going up. Okay, that I will know that we are in alignment with where I'm expecting the weekly range to expand to. Okay, so but literally when we have situation like this, just like you can see from yesterday and today, when price literally opened up and trades up first, okay, this movement, like I said, to the upside, let's look at, it's never random. Okay, it's always going to some sort of resistance, some sort of higher time frame premium array. Okay, so but once I see this kind of price action, it won't stop me, because even though I'm having a bullish bias in mind, it won't stop me from expecting a sell off. Okay, so you don't have to don't how am I going to put this, based on the fact that because you didn't see market trades down first before going up, before rallying up, doesn't mean you won't take a setup. Okay, if price offers you this and you're able to get in, just like I did, to down to a reasonable level, you can be done for the day. Okay, no need to stress about it, no need to keep hunting for long setup, whereas price has already offered you a clean nice setup. Okay, you can, this was it, and I was done for the London session. Okay, although I did not you know, I participated in the New York session a little bit, but I am not going to cover that. Okay, I didn't take the slides, so we are probably going to call the video to an end today. Okay, so our mentorship is still available. If you wish to join, kindly reach out to me on Telegram. Okay, so I'll see you guys tomorrow in our next video, in our next episode. So do have a great evening.